Picture this. You've poured your heart, soul, and life savings into building your manufacturing business from the ground up. The machines are humming, orders are coming in, and you're finally seeing all your hard work pay off. Then one day the unthinkable happens. A worker is injured, a product malfunctions and hurts someone's, or a hurricane devastates your facility. I'm Santiago Cueto, a board-certified international attorney and best-selling author. Today, I'm going to break down the liability insurance trap destroying manufacturing businesses in Florida. In an instant, everything you've built could come crashing down unless you have the right commercial liability insurance. As someone who has spent over 30 years helping Florida manufacturers navigate the complex world of business insurance, I've seen firsthand how the right coverage, or the lack thereof, can make or break a company. Today, I want to share with you 5 critical tips you absolutely must know before signing any commercial liability insurance policy for your manufacturing business here in Florida. These aren't just tips, they're lifelines for your business in a state where natural disasters, unique liability concerns, and a complex legal environment create a perfect storm of risk for manufacturers. Here's tip 1. Understand Florida's unique risk profile. Florida isn't just any state when it comes to manufacturing risks. We face challenges here that businesses in other states simply don't have to worry about. First and foremost are our natural disasters. Hurricane season isn't just an inconvenience, it's a potential business killer. From June through November, your manufacturing facility faces the threat of catastrophic wind damage, flooding, and power outages that can halt production for days, weeks, or even months. But it's not just hurricanes. Florida's high humidity can accelerate equipment deterioration, and our position as a lightning capital increases electrical risks. Our state's unique ecosystem means certain chemicals and manufacturing byproducts face stricter regulations here than elsewhere. When reviewing commercial liability policy, ensure it accounts for these Florida-specific risks. Standard policies written for businesses in Ohio or California simply won't cut it here. Look specifically for hurricane and windstorm coverage without excessive wind deductibles, flood insurance that covers both building and equipment, business interruption coverage with adequate restoration periods, environmental liability protection tailored to Florida's sensitive ecosystem. Remember, insurance designed for the general U.S. market is like trying to fit a square peg in our distinctly Florida-shaped hole. Tip number 2, don't underestimate your product liability exposure. As manufacturers, what keeps most of us up at night isn't necessarily what happens inside our facilities, it's what happens after our products leave our doors. Florida's consumer protection laws give significant rights to injured parties. Combined with our state's reputation for high jury awards, this creates a perfect storm for manufacturers who haven't properly insured against product liability claims. Here's what you need to know about product liability coverage. First, understand the difference between claims-made versus occurrence-based policies. A claims-made policy only covers incidents reported while the policy is active, while occurrence-based policies cover incidents that occurred during the policy period, regardless of when they're reported. For manufacturers, occurrence-based usually provides better long-term protection. Second, ensure your coverage extends to completed operations. That is, damages caused by your product after it's been sold and left your control. Third, don't forget about product recall coverage. If a defect is discovered, the cost of recalling products from the market can be financially devastating without proper insurance protection. And finally, make sure your policy covers defense costs outside the limits. This means legal fees won't eat away your coverage amount, leaving you exposed if you face a large judgment. I've seen too many manufacturing businesses discover too late that their comprehensive policy had gaping holes when it came to product liability. Don't make that same mistake. Here's tip 3. Look beyond price to total value protection. I get it. Running a manufacturing business in Florida isn't cheap. Between rising real estate costs, utility expenses, and labor challenges, you're watching every dollar. So when that insurance quote comes in and it seems high, the temptation to shop purely on price is real. But here's the brutal truth. The cheapest policy is often the most expensive in the long run. Let me explain what I mean by total value protection. When evaluating commercial liability insurance, you need to consider coverage limits that reflect your actual risk exposure. Too many manufacturers base their coverage on what they think they can afford rather than what they actually need. Run the numbers on a worst case scenario and then add 25%. That's your starting point. Deductible structures that make sense for your cash flow. Sometimes a higher premium with a lower deduction makes more sense if you don't have the liquid capital to cover a large out-of-pocket expense when disaster strikes. Defense outside limits. As I mentioned earlier, this ensures legal costs don't deplete your coverage. In today's litigious environment, defense costs can easily run into six figures before you even get to settlement discussions. Another thing to consider is loss control services. The best insurance don't just pay claims, they help prevent them. Look for carriers that offer risk management consultations, safety program development, and regulatory compliance assistance as part of their package. Next, consider claims handling reputation. When disaster strikes, how quickly and efficiently does the insurer process claims? A policy is only as good as the company backing it when you need to file a claim. Remember, price is what you pay, value is what you get. And in commercial liability insurance, that difference can determine whether your business survives a major incident. Here's tip 4. Don't overlook the power of endorsements and exclusions. The devil, as they say, is in the details, and nowhere is this more important than in the fine print of your commercial liability policy. Endorsements and exclusions might seem like technical afterthoughts, but they can dramatically alter the scope of your coverage. An exclusion for risks that's common in your specific manufacturing niche can render your entire policy nearly worthless when you need it most. Here are the Florida-specific endorsements every manufacturer should consider. First, mold and fungus coverage. Given our humid climate, this is often excluded from standard policies, but represents a real risk for many facilities. Equipment breakdown coverage is also something to consider. This goes beyond standard property insurance to cover losses from mechanical or electrical failure. Next, consider cyber liability endorsements. As manufacturing becomes increasingly digitized and connected, this protects against data breaches, ransomware, and other digital threats. Also consider professional services coverage. If you provide any design consulting or specification services alongside your manufacturing operations, this protects against claims of errors or omissions. Equally important are the exclusions to watch for. Number 1, pollution exclusions, particularly problematic for manufacturers who use chemicals or produce waste. Also watch out for prior work exclusions. These can leave you exposed for products manufactured before the policy period. Next, watch out for subcontractor exclusions. If you outsource any part of your manufacturing processes, this could leave a serious gap in coverage. Never, and I mean never, sign a policy without having your attorney or a specialized insurance consultant review these endorsements and exclusions. What seems like standard boilerplate language can be the difference between full coverage and financial ruin. And here's tip number 5. Build a strategic relationship with your insurance provider. The final tip I want to share with you today may be the most important of all. Your insurance provider should be a strategic partner in your business, not just a vendor. The right insurance relationship goes far beyond a transaction. It should include regular risk assessments. At least annually, your insurance team should walk your facility, review your operations, and help identify emerging risks before they become problems. And also claims advocacy. When something does go wrong, you need someone who will advocate for you with the carrier and help navigate the claims process. And also regulatory updates. This is huge. Florida's insurance regulations and manufacturing standards change regularly. Your insurance partner should keep you informed of changes that affect your coverage needs. And also, your insurance partner should include scaling guidance. As your manufacturing business grows, your insurance needs will evolve. Your provider should proactively suggest coverage adjustments that align with your development. When selecting an insurance provider, look beyond the big national brands. Consider agencies with specific experience in Florida manufacturing. They'll understand the unique challenge you face and have relationships with carriers who specialize in our market. In Florida, where unpredictable weather meets a complex regulatory environment and a challenging legal landscape, the right insurance coverage is as essential to your operations as your equipment, your facility, or your workforce. Don't wait for a disaster to discover what your policy really covers. If this video helped you understand more about Florida's insurance framework, like, subscribe, and I'll see you in the next one.